Alright guys, welcome back to AWM FX. Good morning, good afternoon, good evening, or good night, no matter where you are. So it's been quite some time since I've made another video for you guys. So here I'll be doing one video. I felt that it might help some of you guys, the traders, new traders out there, or even some experienced trader but still confused of what you should be doing. So today I'll be talking about the price action or price structure, right? I'll try to make it as short and compact as possible. So first of all, as we know, okay, the price in the market always make three kind of movement. There is only three kind of movement. So that is the uptrend, the downtrend, and the sideways. So these are the basic kind of movement. All right, and then of course I'm going to the basic is that a lot of us know that in order for the price to make the, or should I say categorize as the uptrend, right, it has to have a high, low and high, and then the price break the previous high. All right, previous high to make a higher high, higher low, higher high. All right, in this case it is categorized as a uptrend. So about the downtrend is the same, but we reverse it. So there's a high, there's a low, then the price break the previous low in order to become a lower low, lower high, and then lower low again. So this will be categorized as the downtrend. So the sideways is the easy one. So to categorize a sideways, we can see the movement is not breaking any high or any low, right? But saying this is easy, all right? Looking at this is definitely easy. Reason is that because this is line, all right, it's very easy to categorize it. But if you look at the chart, okay, if you look at the chart, you might get confused. So here I have a very simple things for you to how should I say, simple formula or simple things I always keep in my mind. So first of all, in order to categorize as the uptrend, everything has to break the high. All right, everything has to break the high. If it does not break the high, so the price is not moving uptrend. It's that simple. Similarly with the downtrend, the price has to break the low. All right, the price has to break the low. If it does not break the low, it's not downtrend. Right, later in the chart I'll show you, then you'll understand. Then of course for the sideways, the price has to break the trend line. All right, we call this the trend line for a channel. It has to break the trend line either from the top to the top to the top or to the bottom. It does not matter. All right, it doesn't matter either to the top or to the bottom. So it has to break it in order for it to get up from the sideways. All right, and another thing is that a lot of you have to know is that what type of time frame you are trading. So meanings that you need to categorize yourself as a, let's assume now we're looking at a H4. I'm looking at a H4 uptrend, but how about H1 or M30? Is it still on the uptrend, or maybe it's going downtrend because price tend to retrace? All right, price tend to retrace before moving further up. So every time you trade, you have to categorize yourself which time frame you are trading in. All right, because price moving in fractal form. Fractal means that what happens in the small, it will happen in the big time frame. It looks exactly the same, but just that we have to know at which time frame or which area that is the danger zone for us. It might get confused right now. Hopefully I didn't get you guys too confused about it. So let's look into this example over here. So now as you guys know, I've been trading gold a lot recently. All right, so I'll give a few simple examples. Let's go to daily chart so some of you know. So first of all, like example like this movement over here, we need to categorize ourselves. We need to identify which are the high or which are the low movement. Right, let's look from this part onwards. All right, it's easier. So first of all, when you look at it, you can see that the price is actually moving high, low, right? High, high, higher, low, high, high, higher, low, high, high, higher, low, right? So the price break the previous low, break the previous low, break the previous low, break the previous low. If you look at it properly, it never broke the previous high. All right, it never broke the previous high and it keeps going down. So this is categorized as the downtrend, right? So at this point, the price gets stagnant. It's a sideways movement. It's a sideways movement. Then the price broke, all right, broke the top of this trend line, came back, retest, and then now moving further up, right? And then do we know that it's going continuous uptrend? No, we do not know that. Two reasons is that it has not broke the previous high over here. This is the high of a daily. Alright, hopefully you guys agree. And this is the previous lowest point. So the price is moving from, at this point, is at the middle of nowhere. We do not know. It's either going up or going down. Alright, it might reverse and broke the low. Alright, it might do that. So we do not know at this point. So does it mean that we don't have trading opportunity? So no, it does not mean that. So in this case, we can switch it to lower time frame, right? We will switch it to lower time frame. Now, if you remember, the orange colors are the important, should I say important high or low from the daily chart, right? So now let's look at the 4 hours. Okay, based on 4 hours, you can do a lot of things, right? Based on 4 hours, of course, there is a pattern over here. All right, most of us do know this is what we call the double bottom pattern, right? It does not matter. So what happens is that when the price came to this area, I believe in one of my videos I told you guys before, the price has to break this high for me in order to continue going, but doing buy, right? Buy trade, right? So for me, this does not consider as a break, right? This might be a fake up or fake break. So I need the price to come back and then break it nicely, right? Break it nicely. This is one of the reasons I will consider doing buy trades only, right? Once the price broke this area, a lot of you get panicked and keep doing sell because the price comes down quite fast. Of course, you have the opportunity in lower time frame. That's why you need to know what kind of time frame you're trading in. So what happens is that if you look at the big picture, we know that the price will come back, retrace, and then shoot up, retrace, and then shoot up, retrace, and then shoot up, might going higher and higher until at a certain area, certain zone, which this is what we call it the danger zone, where the price might react or not, we do not know yet, right? It might shoot up again, retrace, and then shoot up. So at this point, you have your bias of buy in a 4 hours chart. So you can do a lot of trade. I mean, you can do a lot of snipering, or you can go into smaller time frame and look for opportunity for buy with more confidence. So of course, you can do sell trade like I did, but I'll be very cautious about doing sell trade because we know the whole trend is going up once it breaks the previous high over here, right? We know that. That's why we have to be cautious. We have to keep this thing in mind. That is how we read the market movement, right? And then if we combine it with the knowledge that I've shared with you, the supply and demand, you will get even better because you can see at what point the institutional traders or the big bank place their trade, right? Place their trade and then push the price even higher. So from there, you can get even better result of doing buy trade, right? Where else when you're doing sell trade, you have to be cautious. There's always opportunity, right? There's always opportunity. If you look at this section, let's come back at this box area. If you look at 30 minutes or even better 15 minutes, you can see there is opportunity of doing sell trades. that is definitely right. Example over here. The price, this we let us draw it. This will be the previous high. Let's make it into a different color, easier to. This is the high of a 15 minutes. All right, high of 15 minutes. Right, and then this is the previous low of the. Sorry for that. This is the previous lowest point of the 50 minutes. Right, it pushed higher. Then the price came and then make the sideways movement. This is what we call it the sideways movement. It's not breaking high or breaking low. Then suddenly this drop. All right. Once it dropped, means that it already broke the previous low. The price will come back, retest, and then go back down. You can see it will retest and then keep going down. All right. So in this sense, there is always a trade opportunity. If you look at the movement over here, the retrace to this down is already 231 pips. Is even this short movement over here, you can get a lot of money. But of course, you have to be cautious about that. You have to keep in mind, because you have to know the overall trend is going uptrend. However, what is going to happen over here, we do not know yet. All right, we have to wait for the price to break and then wait for opportunity to wait for the price to come and retrace, and then we make buy with confidence. That's how you make trades with confidence. You have to know that, and you need to know how to read the market. On different time frame, you always have opportunity. Once it breaks the low, you always make a sell, 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 sell. All right, until a certain point, it will reverse, and then you see, if you look at its price, once it break the high, all right, come back, retrace, right, and then it push the price higher. So you have to keep this information in your mind. We are using what kind of time frame, which time frame you're looking at, and what bias you are making. All right, and then of course you have to be cautious about at a certain point, at which point at a higher time frame is very dangerous. Like example here, if the price is keep moving towards this point, I'll be very cautious about here. I do not know whether the price will move further down or lower, going shoot up. So if it shoot up, I'll wait for the retracement, that I'll doing buy trades again. And then if it's going sideways movement like this, then I'll look into smaller time frame. Same thing, I'll analyze it using the structure, price structure. Even in 5 minutes, you can see that the price structure is always there. All right, example, let's see over here. All right, the price structure. All right, it breaks the previous low, keep going down, keep going down, keep going down. There's always movement, there's always opportunity in different time frame. All right, hopefully this video does not confuse the things that you already learned before, or how should I say, and I hope it strengthens your knowledge on price structure, because actually it's very simple, easy. Just look at the high and the low, and you have your bias of doing buy or sell. Right, that's why the QML exists, because when the price break the previous low, all right, the price will come back, react, and then goes down. But however, sometimes the QML fail. Okay, example, I'll show you over here. I think that is a good example of QML fail. Okay, example over here. Why the QML fail? Right, this is considered a not very pretty QML. All right, it failed to react. All right, it's because that we know the bias is going uptrend. Then why should you be doing sell over here? Okay, do you understand about it? All right, so you have to be cautious when you're doing sell in this kind of sense. Okay, hopefully this video clears a lot of doubts for you guys, and you guys learn a few tricks or tips about it. So give me a like if you think this information is useful, and do subscribe All right, so see you guys then. Bye.